Hello, everybody. Welcome to another week of The Sense of Things with Jeff and Ron. We are here. It is summer. I think Ron said it's actually cooler in Arizona and in Texas. We are just getting rained on nonstop, which in the middle of July is a welcome sight. So today on the show, Ron's got a ton of stuff I can't even cover, but it's things like what kills a bull run, innovation cycles, earnings, funds underperforming. So we'll get a good swath of that. I've got a really good kind of trend on where interest rates are currently, and then also what may affect the Fed's decision one way or another at the end of this month. So stay tuned. We'll be right back on in just 1 second. Hey, everybody, welcome to the show. Ron, how are you, my friend?
Doing well. By the way, it's Shark Week. I'm kidding. It's earnings season. It
Yes,
just
it is
started this week.
not quite Shark Week. It's the early Shark Week on Nat Geo, which we've been enjoying. And then Shark Week starts the 27th, man. I watch it every year.
I hear you. Yeah, it's been interesting so far with the earnings. This is the financials usually come out this week.
Yep,
Obviously, JP Morgan, otherwise better known as the bank.
yep.
Obviously, they had good earnings. They always find a way to make money.
Mm.
And with their size and influence, they're able to make money in almost
I
every
mean,
single
Big
area.
Four, yeah, Big Four look great. Goldman, JP Morgan, Bank of America, and even Wells Fargo, which typically is a bit of a mess. All of them had phenomenal earnings.
Yeah, the semis are sliding, but there was such an air pocket in there.
Yeah.
You know what? I can't tell you when's going to be the right time to either add or initiate
Mm,
a position, but you could nibble on the way down because these
mm.
are all going to go up. The numbers are supporting themselves almost to a point where their PEG ratios and other information is making them almost look like a good buy or fair value, which is insane where it was in the last month.
What NVIDIA? Right as I pulled in this morning, they were talking about NVIDIA, and actually NVIDIA is 21 PE on a stock that's growing at 56% per year.
Yeah, it's a place to, as long as you're not overweight, it's a good place to add. All
Well,
right, here we
it's one you got to hold your nose and hold your stomach because it flips around a lot. But other than that, a lot of these semis, there's just opportunity because that's where we're moving.
as I tell my clients with those type of stocks, if you're going to hold it for the long term, there's a lot of EKG in there. You
Yep,
just gotta be able to look at it every now and then, not every day.
absolutely.
All right, we got a small week here in this week in history, but a couple of good ones.
Okay. Ah,
1799, Rosetta Stone found. And I
pretty
was actually
cool.
reading this article. It was interesting because the Rosetta Stone was essentially supposedly the key to interpreting hieroglyphics. And
Yeah.
I thought it was pretty interesting. It was a good article. You know what? I got to tell you, I've got to go on YouTube or something like that and watch a full history of it because I love cryptograms, I love puzzles and stuff like
Mm.
that. I just thought it would be interesting to figure out how they did that back in that day.
Because it had the hieroglyphics, but it also had Greek on there. So they were able to interpret the Greek and then infer the hieroglyphics from it. So yeah, it's
Yeah,
pretty cool. I actually saw the real one at the British Museum in London, which is cool.
nice. 1862, President Abraham Lincoln signs into law for
Huh,
awarding the U.S. Medal of Honor, Army Medal of Honor. Then the next year, they just changed it to Medal of Honor to
period. Yeah.
support all military branches.
Yeah. But the interesting thing is it's still, even though it is the Medal of Honor, period, the Congressional Medal of Honor, it actually, there is a version for each of the services, though.
Oh, I'm sure.
Yeah.
Like Silver Star and things like that
Yeah.
for bravery and above and beyond. So I get it.
Yeah.
1881, Billy the Kid is shot to death. I just think it's amazing how many movies and books and what TV
Mm.
shows are based on Billy the Kid. And it's like everybody loves the vigilante. Look at the Sopranos and everything
Yeah.
else. It's just this, all this guy did was go around and shoot people.
Yeah,
Steal.
he was
And it
really a despicable individual,
it
basically.
is, he was. But I'm just saying, it's almost like glorified in Young Guns and
Oh,
back in the day and just ridiculous. 1903, Ford Motor Company takes its first order.
huh. Wow. I didn't realize it was that far back, but I guess so.
Yeah.
Yeah.
The car had many versions of it in the late 1800s, but Ford was the first one, as we all know, to start and perfect at that day the assembly line. But if you remember, I watched a really good documentary on it. There was supposedly a patent on the car that prohibited him from making his own car. There were
Hmm.
two or three people that said they had the patent on a car. And I don't know if he went all the way to the Supreme Court, but it went very high up to basically say it was. And
Hmm.
then once it went away, then he obviously got the funding to do his own manufacturing. It's
Yeah.
pretty interesting just how back in the day, you talk about the swindlers today and how
Oh
people
God.
control markets. Back in the day, it was the Wild West in every area of business.
Yes, it
1930,
was.
the first World Cup
World Cup.
tournament begins.
And we're down to the final two,
Yeah. Yeah, I
Argentina
got
and,
I only watch it
Spain.
every 4 years, obviously, or soccer
Yeah.
in general every 4 years, and I enjoy it.
Yeah.
1935, world's first parking meter, and this surprised me, installed in Oklahoma City.
Oklahoma
I would
City.
have figured it would have been Boston, Philly, New York, one of
Nope.
those, but no,
Parking meter.
1935,
Of course, you
Oklahoma
tied
City.
your horse to it, but other than that, it was yeah,
It was 1935, not
yeah.
1835. It's 1978. Henry Ford II fires Lee Iacocca.
Okay.
And I
The
remembered I
Deuce.
was 12 years old. I think it was either 79 or 80 when Iacocca was made CEO of Chrysler. And I
Hmm.
remember buying 10 shares of stock, my own money in
Hmm.
Chrysler, and I think it doubled or tripled. I
Yeah.
remember that back in the day. And do you remember what the stock symbol was for Chrysler?
Wasn't it C originally, or
See, yep.
yeah,
And I
yeah,
remember back
which
in the
is now
day, we didn't have
Citibank.
the
Yeah.
internet. I remember PBS at 4:15 had this scroll. It was all in alphabetic order, and you
Hmm.
had to just watch it. So we were
Yep.
videotaping it, and we knew at 12 minutes in, the C would go across to see where it closed.
Yeah.
Anyway,
You were a nerdy little kid,
1967. I
man.
thought this was a fun one. Jimi Hendrix drops out of being the opening act for the Monkees. Now,
Okay,
first of
that
all, do you really want to be the Monkees following Jimi Hendrix? And if you go
yeah.
back to the Monterey Pop Festival, Jimi Hendrix and The Who got almost into a fist fight, but a spirited argument about who is going to headline.
Yeah.
And Jimi Hendrix won.
Yeah. And I can clearly imagine him going, I'm not going to open for the Monkees. It does not matter.
And I believe this was right before Monterey Pop.
Yeah.
I was reading the article, and I can't remember exactly when Monterey Pop was, but I think this was right before. And I think the Monkees had just come out. It was their first season. They had a couple of those big hits like Last Train to Clarksville, obviously to ride the Beatles' coattail, but it
Yeah.
was pretty good. 1969, Apollo 11 takes off towards the
Yeah.
moon.
I just heard that
And
this
you know
morning.
it's
Yep.
going to be in 2 weeks. In
Mhm.
this week in history is going to be what?
We landed on the moon.
We landed on the moon, my man.
Yeah.
1985, I still kick myself for this.
Live Aid.
Live Aid begins in Philadelphia and London, and it was
Okay.
the last concert at JFK Stadium, which held
Huh.
over 100,000 people, where the Army Navy game was played in Philly for decades. And I lived less than a half an hour away, and I didn't go. And a lot of
Huh.
my friends were telling me, oh, this is the Woodstock of our generation. And this, I could have gone. I could have gone, and I did not go.
Didn't do it.
And I kicked myself for it.
Uh,
Okay,
at
here we
least at
go.
least it
Bull
wasn't Farm
runs,
Aid.
or Lollapalooza. You go to Lollapalooza,
Lollapalooza. There you go.
or no, you go to what's the fair for the ladies?
Lilith Fair.
Lilith Fair. There you go.
Yeah.
All right. So what kills bull runs through history?
All
We're going to
right.
pop through this pretty quickly. If you look through this, you can see where the legend is on many of these things. And you can
Mhm.
see back down here, right? It's not saying the bull run is over. We're 225% in from the COVID bottom, not the
Mhm.
2022 October bottom, but the COVID bottom. And it's pretty interesting because we don't know what's going to kill it. And I think it's pretty interesting here, right? It's looking at the '02 to '09 the speculative bubble. But if you
Hmm.
look at it, this was one of the least or the smallest bull runs
Yeah.
compared to other speculative bubbles and other runs. What is your take on this before I move on? I just thought
Well,
it was
I think it's
fascinating.
interesting when everybody's, oh my God, this thing's gonna end. And I'm like, it's really an average bull run at this point. It's really not. And a big part of that came off of a big old whack when we got COVID. Really, if you look at the bottom of COVID and up, it's not that big of a deal at this point.
And it
Certainly
was a
the
6 week.
90, yeah, the 90 to 2000 bull run, that thing just kept going and going. But there was a lot of UG in there too
There was
in
no
the early
earnings.
90s.
But if you say this starts in of March or April of 2020,
Yeah.
that was only a 6 week pullback of 30%.
Oh, I
And then
know.
we spring
Yeah.
coil to the upside. The
Yeah.
bigger difference was here when we had 17 months from peak to trough in October of '07 to
Mm.
March 9th of '09. That
Yep.
was just a steady 66% fall, then falling off the cliff downside over
Hmm.
those months. So
Yeah.
yeah, what's going to happen next? Who knows? But this pullback in semis, as we were talking, and a few other things, these are healthy pullbacks. If you're a trader, tough crap. But if
Yeah.
you're a long-term investor, hang in there.
Yeah.
All right. So also with this innovation, how does the AI boom compare with boom bust cycles of other major innovations? By the way, I had to look it up. Do
Hmm.
you know what the canal mania was?
No, not really. I'd not even, I know what it is. It's the Panama Canal, but I
This
don't
is
know
the
how that.
dumbest thing, my man. I mean,
Yeah.
back in the day, this was a speculation of canals that were going to be built throughout Britain
Oh,
and the UK that people were just buying, and most of them were never built. So
yeah.
there was all this hype that, oh, because remember, they didn't have cars. So
Yeah.
they had horses, and obviously, bad terrain. Oh, we're going to build all these canals and connect them together.
Mm.
And there was all this speculation. It was almost like Tulip Mania, which should have been on here
Yeah.
too.
The funny part with that, we love the canal. There's a show with a couple of actors that they did all these canal journeys, and so many of those canals, it took so stinking long to build them that by the time that the canals were done, railroads popped up, and it just killed all of these things at that point.
They
So
also didn't have the technology that we had today to just dig and dredge.
yeah.
But to me, you could compare this a little bit to the dot-com boom, but probably
Mm.
the railway mania. And I don't know why it said it was only around 10 years because
Yeah.
it took a long time
Yeah.
to
That was
build the Intercontinental Railroad and then other railroads to connect other cities.
yeah.
So,
Really,
but
the
but
yeah.
but what I don't like about this is the trajectory. I would have liked to see a more smooth line, but you don't
Mm.
get that with speculation.
No. No, and this is a whole nother different level of speculation.
Yeah, we're going to go through this quickly. We did a couple of charts on this last week. So on the left, we have the expected earnings growth year over
Mm.
year by sector. We had talked about information technology. Obviously, energy is really big, not necessarily oil drilling and production. This
Mhm.
is more on the grid.
Yep.
Then we get the revenue growth. As you can see, even though they got big earnings growth, they're not the biggest when it comes to revenue growth. Info technology is going to blow them away, and it's more than twice the earnings. On the right side, we have the estimate versus actual. I mean,
Mm.
is this not ridiculous as far as these gray areas for estimates? And look
Yeah.
where the hell we are, almost 50% higher than last quarter and almost two-thirds higher than
Hmm.
Q4 2025, 6 months ago.
Yeah.
This is insane.
Yeah. It's in
And
there.
by
This
the
is,
way, did you hear any market strategists back in January or February saying, look out for Q2? We're going to have
Mhm.
unbelievable revenue and earnings in these
Yep.
sectors. No,
Not in the
schmucks,
slightest.
all of
Yeah.
them.
Yep.
Yeah.
Not in the slightest. And once again, every time I keep hearing people, this is just the dot-com bubble all over again. Oh, no, it's not because these companies actually make real money. There's a difference.
Yeah. So we'll see. We've got first week of
Yeah.
earnings. We'll see how it progresses. I thought this was interesting because if you're in a fund, mutual, or ETF, you're
Mm.
paying a fee. UITs, you're paying insane fees. But this is
Mm.
percentage of large cap, domestic, US based equity funds underperforming the S&P. Last year, again, the last 3 years, we have had double digit gains and the S&P, and you have an average, if you just add this up, right? 66%, 67% underperforming. They are
Hmm.
not beating the S&P. Now, all these similar strategies as far as growth or whatever, that's
Hmm.
why you need a portion depending on where you are in your life stage and how many years to go. You just need to be in some index funds, keeping up with the market because you're going to underperform. You need to be diversified, but you got to have
Hmm.
a percentage in your portfolio of just a regular low cost index fund because if this chart doesn't prove it, folks, nobody else is going to convince you.
Yeah. And I think, like I said, and it's not for the average person because they're not going to put in the work. But for me, I changed a lot from my perspective of we always have a large section of client portfolios that are in individual stocks because this diversification of just have everything in the market, okay, that's great, but you're never going to outperform the market if you don't tighten that up a little bit and choose the best of the best.
Yep. All right, we're wrapping up here. Just this is a very quick slide. This is basically your ultimate
Mm,
conundrum. The
yeah.
market is going up and consumer confidence is lower than it
Mm,
was coming out of the financial crisis in '09 and 10.
yeah.
Now, is this all media BS? Is this all social media crap? Or is this
Mm,
really the general? Again, we don't know political views of this number, but
mm,
this is probably a broad-based number across both. And we're at the lowest consumer while the S&P is near an all-time high. We got to revisit this at some
yeah.
point across other podcasts, but we'll see. And then
Yeah,
lastly,
once again, I keep saying the fact it's the what they say and what they do are two different things. So,
uh,
yeah.
so I actually had someone call me last week and say, I know you told me to hold off on buying SpaceX. Is now the time to buy? And I said, not yet.
Yep.
So this was the chart we showed back in the day about,
Hmm.
big names, a lot of hype behind these companies and where they were after 1 week to 12 months and what the 1 year drawdowns were. Here we
Hmm.
are, SpaceX, and as we're talking right now, it is under the issue, not the opening price, the
Hmm. The
issue price
issue
of
price.
135. It's selling at 134.65. So, folks, in my opinion, which means absolutely crapola, it's going to go lower before it gets higher.
Yep. I
So
agree.
I'm not saying this isn't going to be a great company in five
Mm.
years. It's just not a great company to potentially buy right now. Your thoughts?
But and very few you look at the names on that list, which they're phenomenal companies today. They all of them, there's so much hype going into them at the beginning, and this one was hype beyond hype. So it's great for the company because they got a lot of money in that they can use, but it's not necessarily great for the stock in those
No,
cases.
I agree. What do you got?
All right, let's quickly run through this. Oops, lost my thing here. Okay, so let's get started with a little bit of what's going on in the economy. Came out today, or a couple days ago, excuse me, PPI final demand actually came in, which is really interesting. We came in below PPI down zero point 0.3, PPI year over year, which was expected to be 6.2, came in at 5.5. So once again, PPI, for those of you that don't know, is the producer price index, and that's the front side of the buying conversation. So this is saying that we're actually seeing a decline in inflation a little bit, at least from the producer perspective. Once again, it's 1 month or whatever, but it's an interesting look at, okay, what's going on. And the theme in the market is, oh, there's probably going to be at least one raise by the Fed. I would argue probably not at that point. Looking at a couple of other things, Empire State Manufacturing Index, whatever's going on in the world is not necessarily affecting manufacturing. It was expected to come in at 8.6. It almost doubled at 15.6. The really interesting one actually came out this morning, which was the Philly Fed Manufacturing Index. The consensus was 14. It came in at 41.4. So that says
How are you
manufacturing.
so far out of bounds there? Gee whiz.
Yeah, once again, I
You
want
could
to be a
throw a
weatherman.
dart and totally miss the
Yeah.
dartboard with that.
And I want to be a weatherman or
A
a
weatherman, an
an
economist, or a stock
economist.
analyst when you
Yeah,
come back.
stock
I know that's my
analyst. Yeah,
gig.
because I can still keep my job if I'm really wrong. So yeah, once again, two manufacturing indexes that are really rocking it. Jobless claims came in 208. The consensus was 220. I've heard even 217. So this is the second week in a row that they've come in, or third week in a row that they've come in pretty much below where estimates were. Retail sales came in this morning a little light, zero point 0.2. X vehicles, it was actually in the negative. X vehicles and gas, it was up 0.4. It was a little higher on one side of it, a little lower on the other side of it. Something to keep an eye on, I think, at that point. This is the big number. And this is, once again, I've got a really close friend that I film another podcast with that we talk about Austin real estate and investing and things like that. And this, I will tell you, is a major factor that's affecting the economy. Month over month, pending home sales actually dropped, and it's largely interest rate and just uncertainty based. Are you hearing the same thing out there, or?
The interesting thing about the housing market here is there are pockets that are still doing well. The pockets are just the luxury homes, the high
Okay.
end. The low and the medium are still struggling for whatever reason, because a lot of the luxury, either the home builders are either financing it themselves or they're paying cash.
Yeah, which you got a lot of people moving in from California still. So
All over, yeah.
yeah, they
No,
write a
and they're
big
still
check.
building here. Even on the outskirts of Phoenix and Scottsdale, they are building because they're going out because the houses are a little
Mm,
more reasonable and whatever, especially outside of Scottsdale. Scottsdale's
mm,
insane,
yeah,
especially with taxes too. Not as bad as taxes in other areas of the country,
sure.
but that's where they're getting more bang for their buck. So yeah, it's still
Yeah.
struggling here too.
Yeah. Yeah. Here for the longest time, it was people moving farther and farther out for affordability. But that also, I think, bit a whole bunch of people because they assumed that they would be working from home forever. And all of a sudden, companies are like, no, we need you back in the
Yeah.
office. So now you've taken yourself from a 30-minute commute to an hour and a half commute now at this point. Only things left for this week: housing starts and permits tomorrow and industrial production. Those are the only things that are anything of interest. And I would assume housing starts and permits are probably down as well. Industrial production, I would guess, would be up, even though the market kind of shrugs all that stuff off and ignores it. Last thing on the list, we haven't gone and visited our old friend, the Treasury yield curve, in a long time. And I think the last time we looked at it was probably about 8 to 9 months ago. And
Yeah, probably.
short end was way up here and long end was way down here, signifying a recession that never happened. This is a what I would consider a sort of more normal a yield curve, although it is pretty steep. The big number that you really want to see here, this is the 10 year. This is what all mortgages are based on, is the 10 year. And it's sitting at about 4.5 right now, which means you figure about 2 points on top of that. We're at sixes, low fives or high fives and low sixes when it comes to mortgages. And I think that's having a pretty pronounced effect on the market. People are looking at, if I'm going to sell my house and I've got a 2.75% mortgage, holy crap, I can't go out there and get a 6% or whatever mortgage. I just can't
Yeah, right
afford it
now the
anymore.
30-year fixed is right around 6.64.
Yeah. Yep. Until that kind of calms
That's
down a
not going
little
to move the
bit.
needle.
Yeah, it ain't going to move the needle yet. People are moving, but it's because they have to move, not because they want to at this point. And I think that's trickling down. And that trickle down effect from people buying and selling houses means that it affects all the other stuff downstream, like Home Depots and Lowe's and all those kind of things. So just something to keep an eye at because it is a major factor that affects a lot of other pieces of the pie.
Yeah, next couple of weeks should tell us a lot more with the earnings. We're going to get more
Mm.
financials. We're going to get manufacturing, and then the
Yep.
tech stocks start to release it, and I'm sure they're going to bang it out. But the problem is if they don't hit on all cylinders, they're going to get whacked by. Look what happened to IBM.
Yeah,
The worst day in history as far
for
as the down move,
IBM. Yeah.
25%.
Yeah. Yeah.
So
And
it's
it's
like,
that I think that's the big problem with a lot of these stocks. We try and before reporting, or I always keep a little cash on hand during these time periods because on a day like that, Big Blue is still an awesome company. And we don't own it, but it's an awesome company. And if I was looking to buy, that's a great day to buy when these markets just get waffled like that, or when
yeah,
these stocks do.
I hear you.
Yeah. Great time to kind of keep an eye out for some buys when the market drops or when the stock drops. So, folks, as always, make sure that you subscribe to the channel. We occasionally do an extra show here and there, like we did this last week. If you didn't catch it, we launched a special episode on Monday, which went over the half a year, our predictions versus what the market predictions were, and are railing on some of the analysts, as always, that keep changing their minds just to make themselves look good. So stay tuned. We'll be right back next week, and we'll see you then.